Um, good. Should I say good afternoon? 'Cause I don't actually keep track of the time, but it's afternoon. Yeah. So good afternoon to everyone who's going to view this. I hope you actually had a great day. So this is actually iPod. So if you call me iPod, you'll be doing me a great job. So I'm actually here to tell you about Forex in general, as much as you guys be asking how's Forex and all of those things. So today I'm just here to actually give you a brief, talk about, Forex, and let's have a chat about Forex actually. So what firstly I could say is that as much as people want to join Forex, it becomes hard. It actually becomes hard for one to actually answer this question to say how's Forex. For me, I'd say Forex is easy. Why? Because I have a lot of experience. I've been in this industry for a long time. But if one wants to actually start and it's their first time, you can't tell that person to say it's actually easy. It ain't easy. It's about how much capacity of knowledge can you store at once and put it into practice. That's what I used to tell people. But what you should keep in mind is that Forex is not easy, but it's manageable. But like if you give yourself time to actually learn, you'll actually make a good progress, or you'll see results at the end. So Forex is not easy. So whoever that it's out there, lying to you to say, hey, Forex is easy. Forex it ain't easy, and it ain't for the weak, which is true. When we say it ain't for a week, we are not saying criticizing other people, and so no, we're just trying to put it in a simple layman's language or easy language that we can say like slang language, so that you understand. Like when I say or when we say that Forex it ain't for the weak, what we're trying to say is that if you know that you can't control your emotions, you lack some emotional control, definitely just know that Forex it ain't for you, because uh, as I've been in this industry for a long time, what I actually could tell you is that actually Forex teaches you about emotional control. You know, having control over your emotions towards trading, emotions towards everything. Actually, it teaches you about that, because once you place trades, because what I used to suffer from, and what I basically believe that most other traders actually did, might have actually experienced what I did experience, is that I used to lack emotional balance, emotional control towards trading, because every time I open my trade I would be emotionally attached. I'd always be on my screens, checking how the trades are going. Every time I run in a loss, like I panic, I wanted to close early, sort of those things. And as much as you guys should understand about Forex is that it's not a get quick rich scheme. Like you don't just open trades and all obviously run in a profit like that. So it doesn't go like that. So in Forex, what we do is that for every second of the time or whatever minutes that you take when you open a trade, and this is what happens when you open a trade, uh, you're going to actually um, how do I put it? Like every time you open a trade or open a position, your position automatically runs in it's going to always start with a negative. It's going to always start with a negative margin. So you just have to know that it's not like you can't expect it to always be blue at the same time. Like it never happens. It doesn't start with a blue, like it doesn't start with the profit already. Like it always starts with the negative margin and then it'll go into a blue margin, so which is positive margin. So what you need to keep in mind is that, so what I used to suffer from, as I said, is emotional control. Every time I did open those trades, when it ran in a loss, I'd want to close a, even though maybe in the long run I was right, with the market direction, all of those, but I used to like wanted to close early, when I run in a profit after. I always want to exit early, because now I'm starting to like get scared as to what if it might reject, what if it goes against me again, and all of those things. Even though I see that this is actually a good opportunity to actually hold long, but I'd always want to go out. And at the end, after going out, when it's along the way going towards the long term that I did see, I'd want to enter again. And when I enter again, emotion kicks in. When it runs in the loss again, I exit early. Now I'm already in a loss, because for whatever profit that I've made, now entering, it rejects a bit, I'm running in a loss, I close, like it was something like that. So I used to actually, suffer from that. So what I'd say is that when we say that Forex is not for the weak, we're just trying to imply that if you know that you can't control your emotions, just know that it ain't a good industry for you. Because but if you're willing to learn, that's why we have to be diverse about what we say. But if you're willing to learn, you can always dive into this industry, and you will actually learn about controlling your emotions. And what else should I talk about on Forex? What I could talk about again is that in terms of Forex, now we're talking about when you are a trader. Now, when you are a trader, this is what you should consider. Most beginners, to be specific, like they don't believe in mentors. I don't know why, that I can't answer, but like having a mentor or having to purchase a course from someone, it's actually good. It's never bad, you know. Yeah, I hear a lot of scandals out there that people are getting scammed and all of that. That's why they end up, no agreeing to mentors. No. You just found a wrong mentor at the wrong time. I mean, like, you've just found the wrong mentor at the right time. That's why you are saying that mentors are just like that. Nah, that's another scandal for another day. But like, having a mentor is a good thing, because now when you're a Forex beginner now, you don't know what's going on in the markets. Information is too diverse. It's at large. You don't know which to start with, what to go on with. So having a mentor, it's like getting someone to actually guide you towards, taking the right, path. Taking the right path towards, covering the knowledge that's important at first. To to actually understand what's going on within this industry. And one another thing, as Forex beginners, what I'd advise people, those who are actually new into this industry, is that you shouldn't be focused on reading much books and all of those things. I myself, I'm actually busy, writing a book about financial market. So I think I'll publish it once I'm good. I don't care if whether this book is going to take me 5 years, whatever, but I need to reach a certain state to publish the book. I won't publish it now. I won't do anything right now. It's just still busy. If it means writing a book about financial market that has about like over 1,000 pages, I don't mind. I will write it, but when the right time comes, I will. I will sort it out. But for now, I'm still writing the book. It's Victorious Traders. But what I want to put out in mind is that for for Forex beginners, like, let's stop this thing of wanting to purchase books and all of those things. We are not saying those books are wrong. You can purchase them in a later stage, to I needed to take that deep breath. But you can purchase those books to actually enrich your knowledge about trading. But what you need to keep in mind is that Forex is all about practicals. You can't know Forex by knowing the terms and all of those things. You don't treat terms. You don't treat. You can never find in a way MetaTrader 4 asks you. English now is becoming bad. Like, you can never find a MetaTrader 4 asking you as to what is a peep, what is margin, what is equity, what is spread, what is what, like, there's a lot of things. Like, it can, what's a code currency, what's a base currency. Like, it can never ask you that at all. It's just a matter of like knowing as to what does this mean, like, but if you put it into practicals, now putting it into practicals and doing all of those things, at the end of the day, you get to understand as to what's going on within this market industry, knowing those things in a later state. But if you put your work into practice every day, trading, you get to understand what's actually happening in the market, because as a human being you can recognize and recall the things that are happening, not the things that you read. So purchasing books at first start, it's just a waste of time. Like, you're going to read and you won't practice and read later. That's the thing. Practice while reading, or practice first and you'll read later, because like reading is just a waste of another, like it's like putting work on top of work. You can't read. Like, how will you trade if you I'm stumbling because I don't know how to put this, but like, you understand me. Like, put in the practice. The more you trade every day, So for me personally, I'd say that I was unlucky, or should I say I was lucky? But to me, I consider it unlucky. I never had a chance to actually trade a demo at first start. I never actually had a chance to trade a demo at the first start, but I did trade a demo after I blew my real account. Yeah, I did trade a demo, and because when I started, I actually started in 2018, guys. I started in 2018. I almost thought I started in 2017. I don't know why, but my best friend, because it's the person who actually introduced me into Forex, is the one who reminded me that no, bro, we did start late 2018. So I didn't start in 2017, right? So I started in 2018, late 2018, right? So this is what happened. He introduced me to Forex today, right after school. Like, he introduced me to Forex today after school. The day I got home, went to MetaTrader 4, started trading that shit. Oh, yeah. I actually traded a demo at first start. Yeah. It was binary by that time. I started trading binary at that time. But it was just for that day. Because I only traded for that day. Because I wanted to see how MetaTrader 5. It was MetaTrader 5, not MetaTrader 4. So I wanted to see what's going on. I just downloaded the app and just seeing what's going on. I was like placing buy. Like, it's like I already knew what's going on. Like, it's a calling, that thing. Like, I already knew what's going. Buying is going up, selling is going down. So I just knew what to do at that time. I never went wrong. I don't want to lie. I was not like any other. Like, it's like I knew what I was doing, even though I didn't know what I was doing. I knew how to enter. I knew, like, I already saw myself using trend lines, analyzing. I didn't know what I was doing at that time. I didn't know it was called technical analysis. I didn't know what I just knew that I didn't even know what I was just saying, draw a line, drawing these lines, and I didn't know that was called trend lines. I didn't know that what I was doing is technical analysis and all of that. I didn't know what fundamentals were. But trust me, I did know what I was doing. Then after that day, the following day, I deposited $10, guys. I won't lie to you, guys. Now I deposited $10. To be truly speaking, I did even use my card that I was not allowed to use at that time. I used the card that I was not allowed to use at that time. I used my network card because parents, they're monitoring the card at that time, because I was still underage. 2018, I was still 17. So getting monitored is just bad thing. So I just took the card and just put in the credentials right there. Deposited $10, and I lost all that shit within 30 seconds. Like, I deposited. After depositing, went into my room, sat down and looked at the charts and entered. Within 3 seconds, that shit was gone. Like, literally gone. 0-0. That's when I knew that Forex actually needs time. That's when I started now learning by practicing, using demo. Now I was practicing trading every fucking day, going to school. After school I'm there on the charts. But yeah, Forex is all about that. Now let's talk about when you're a trader. When you're a trader, for instance, when you are an intermediate trader. So when you're an intermediate trader, what's the thing that you do that's wrong when you trade? for those who like scalping, it's totally. For those who I don't. Okay, that's fine. So for intermediate traders, what they do is bad. Like what's that they do? Like for instance, if you're a trader, intermediate trader, and you start scalping and all of that. I'm not saying scalping is bad, but keep in mind trading against the bigger time frame structure is totally bad. It's totally bad for your margin. So you should keep in mind that when you trade, use higher time frames, like for instance 4 hour time frame, daily time frame, weekly time frame, to see how the charts are going, to overview the price move, so that you anticipate very well, you see where the price is heading. Then you can start lowering your time frames to 30 minutes, 1 hour time frame, that so to catch you, to get more structure confirmation for entries. And then when we lower it down to 15 minutes, 5 minutes, there it's all about chart patterns. It's all about candlestick patterns now. If you don't know candlestick patterns, now I don't want to get too much deep into forex concepts, trading and all of those. I just want to lay out the basics, tips. Now you are an intermediate trader now, right? You have actually you don't know what candlestick patterns are. You don't even know how to identify them, right? This is what you need to keep in mind when you trade. Now that means you'll be catching your entries right in 30 minutes time frame or 1 hour time frame, no 15 minutes, right? So what you'll do is that you should use a stop loss. I know we hate. I personally hate stop loss. I don't use stop loss. I don't use stop loss unless I'll use a stop loss to only protect my profits. That's when I'm saying I'm using a stop loss. Not to say it's going to. I'm sorry about that. Not to say that it's going to. I don't know how to put this anymore. But yeah, not to say that. What? Not to say that. How do I put this? Not to say that. Sorry about that. Not to say that. What was I saying? Oh, not to say that stop losses, right, when you use them are bad. Now you'll be using a stop loss to actually protect your capital or your margin, right? So that means you'll be using 30 pip stop loss. That's the most reasonable stop loss. And I need to use, like, I almost forgot, when I'm saying 30 pip stop loss, I'm not saying it's good to a position whereby, like, you can over risk and then you're protected. No, you use proper risk management. I know what. Now people don't know what proper risk management is. I always ask people, what is proper risk management? A lot of people are telling me a lot of things that are out of hand. But hey, I understand. It's another concept of how they explain their thing. But it's fine. I won't say mine. It's fine. But if you wanna know, you know where to catch me. Like, it's under my mentorship program. But let's cut that. But you need to know what proper risk management is all about. And using stop loss of 30 pips is a very good one. It's a healthy thing. And then what else? Yeah, just make sure that you analyze in a lot higher time frames, lower time frames for confirmations and entries, so that you don't trade against the price direction. So yeah, that's all I could say for now. But furthermore, let's talk about other trading tips. Keep in mind the very most biggest tip I would say: know about trading psychology. Trading psychology just falls under what I talked at first. There, having to control your emotions, having positive mindset towards your tradings, following your trading setups, following your trading rules, having all of those things, just have a proper psychology in terms of trading. Trading is not a get quick rich scheme. Keep that in mind. And other than that, I hope you're having a blessed day, because I'm having mine blessed. Have a good weekly trade. Other than that, I hope you all enjoy the rest of the afternoon and the month, because mine is gonna be lit.